All right. Thank you so much for everyone that has joined the call this evening. This call is something that was inspired by something that has been a burden on my heart for a while. Not 1 year, not 2 years, but over 2, 3 years now, being in the United Kingdom. I believe that everyone that has shown interest to to join this call this night uh, are ready to change the narrative as touching their being in the United Kingdom. So I have called this presentation a show and tell, but the title of my presentation this evening is Empowering Wealth Creation and Democratization, a strategic initiative for Nigerians in the United Kingdom. Empowering wealth creation. That means wealth creation that empowers those that are involved, and we're going to democratize wealth creation through two strategic social initiatives that I want to discuss with us this evening. So I want you to tighten your seatbelts because the flight is about to take off. So on the agenda this evening, I'm going to have an introduction. Then I will also share with us the two initiatives that I am pushing for us to join. I will also show us how these two initiatives can work hand in hand towards achieving the common goal of democratizing wealth creation. I will show us the risk involved, and there will be a call to action. And of course, there will be room for questions and responses. So let's hit the ball rolling. The young man that you are seeing here is the one talking to you. My name is Dr. Olanrewaju Lewis. I am a researcher and I'm an academician based in Dundee, United Kingdom. And I'm also a certified life coach. I'm a man of many interests. The dictionary calls some of us that are like me multi-potentialites. That means people who have different expressions. It's not their own fault. It's just the way God has wired us. So that is me in short. So let us start with some background. According to the United Kingdom gov.uk website, if you have access to this slide, you will see the link behind that gov.uk link in that place. It's interesting to know that according to the United Kingdom government website, home ownership rates among ethnic minorities in the United Kingdom lag significantly behind the national average. Now, let's get to the basics. I want us to look at these statistics here. 68% of white British households own their own homes, compared to some 4% of Indian households. Now, I want you to be noting the demographic of the representation of the people there. You have Indians on the higher echelon, followed by white British. Then you now see household in Black African, right, are only 20%. Only 20% have ownership, followed by Arabs who are 17%. So specifically, you can see that the Black Africans, right, of which Nigerians constitute the highest percentage, are in the low band in that place. So we see that there is a big gap in wealth creation, and it makes it a bit difficult for an average African to navigate this thing very well. Now, to give us some context, if somebody is a first generation migrant to the United Kingdom, in the last 10 years, it's either you come through work permit route or you come to study path. The shortest that you can come through is the global talent, which is 3 years for the main applicants and 5 years for their dependents. The next category is 5 years, which is the work permit pathway, then followed by further leave to remain for those who have children and possibly study after 7 years. They can have some respite, but it ends up to be 10 years. Now, the headache or the challenge that an average migrant faces, is especially if you are the first generation, is that you are going to spend tooth and ache for you to get that indefinite leave to remain, right? So it makes it a bit difficult at the early stages for you to amount or to be able to do something that is really significant in your life. Now, as Nigerians in United Kingdom, building wealth can be even more challenging because we call something black tax. You're always remitting something either back to wherever you have come from. There is this narrative, and that is why uh, applications like Lemfi, TransferGo, World Remit, Send, all of them, there are so many of them in the marketplace. That's why they are thriving. It's interesting to know that um, a company like, is it Revolut? Revolut turnover in the last 1 year is really phenomenal. It runs into billion. And it's all about migrant market. So you can see that there is a huge market within that space. However, it is not consecrated. It is not focused to achieve something really great. Now, imagine a future where we, as a community of Black Africans, or even Nigerians, if you want to be specific, could collaborate, right, by leveraging our combined resources, right, our expertise, our strengths, our exposure, our knowledge to achieve financial independence and create a legacy for ourselves and future generations. I want you to think about that briefly, because the truth of the matter is that in Yoruba parlance, they say that it is by combined effort, right, that you are able to lift something up. It is by combined effort that you are able to lift something up. Àgbájọwọ́ ni a fi ń sọ̀yà, àjèjì ọwọ́ kan ò gbẹ́rù dórí. That's what Yoruba say. So it means that when you combine forces, it's just like the broom. When you take a normal broom, right, the broomstick cannot sweep very well. But when you have several broomsticks tied together, they end up sweeping very well, which is why this African proverb that says that if you want to go fast, go alone. And if you want to go far, go together. So the combined effort of small bits here and there can actually amount to something great when you look at these analogies I've presented, which is what informs the meeting of this night, this opportunity meeting that I'm sharing with us today. There are two initiatives that I'm presenting towards this evening. The first one, I call it the Property Investment Club. And the second one is African Startup Venture Fund. That is the second one. So I'll be discussing about the first one first, because I want to give people room to be able to ask questions. The Property Investment Club. What is this thing all about? Now, the bottom line of this thing is this. In the United Kingdom today, as you can see from the statistics I gave us, which can be found on the UK government website, that the Black African community, the percentage of ownership of houses or property in the UK is just about 20% of those who own houses. Now, remember that those who own houses are not even up to 50% of the population. So which means out of less than 50% of the population, only 20% of that are of black origin. Now, those black origin are a mixture of first, second, and third generation, right? If you look at one of the footballers in the England squad, Bukayo Saka, right? Bukayo is like a second generation migrant, yeah, because he was born here and he grew up here. So he is a second generation. His parents had first generation. Now, imagine that first generation, second generation, and even third generation migrants who are of black origin only constitute 20% of those who own houses in the UK. Now, this property investment club, we're trying to see how we can join forces, right? To a pool of funds together to buy what is referred to as DLV, below market value, BMV, below market value properties that are scattered all over United Kingdom. An average below market value usually drops about 50% or 60%. Sometimes they move from being below market value to becoming run down. That means when they become run down, they are actually very low in price. And so you cannot bring them back to the value of the market value where they are located. And that process is referred to as refurbishing. So it's like taking something that has run down and pimping it like they do with cars to something that is new and now attractive. That means you add value into it. The primary goal of this property investment club is to generate capital gains for everyone that will be shareholders or members of the club. And we want to use it to also create opportunities for reinvestment. Now, for us that are on this call this night, I want to ask us a very critical question. If you add 10 years to your years, to your year today, right? If you add 10 years to how old you are today, and you find that you have crossed 40 by the time you add 10 years to your years, or when you add 10 years to your years, you have crossed 50. Question is, where do you want to be in that 10 years? What state, what kind of life do you want to have, right? How do you want your experience to be in that 10 years? I want you to think about that critically for just a moment. And the reason is because if you don't do that mental jogging, like mental jig that, okay, wait, I am so age now. If I add 10 to it, I will be this time. Now, when you have done that, I want to do a second exercise again. The people that you know who are the age, that age that you'll be in 10 years' time, ask yourself, how many of them are financially free? The people within your network, the people within your circle, when you add 10 years to whatever age you are now, ask yourself, how many of them are financially free? If those that are financially free are not up to 50%, it means that you are likely to be like them in 10 years if you don't do something now. So those are the two exercises I want you to do. Now, why should you buy into this property investment club? The key benefits are very simple. Profiting from refurbished properties sold at higher market values or refinancing will actually bring more dividend to whoever is involved. And I'll quickly break that down briefly. In the United Kingdom, if you add value or you change a particular property that is run down or below market value into something that that is now of high value, right? What will happen is that you can either decide to refinance it. Now, refinancing means that you take that new property in quote to the bank and tell the bank that I want you to come and value this property because my surveyor has done a valuation and this is the new value. Usually the bank would drop that value by possibly 5% or 10%. They will usually drop it because they are business people. They also want to make money. So even if they drop it by 5% or 10%, no problem. That new value will now be the new value for which they will now put mortgage on the property. But here is a catch for the property investment club. Rather than buy property on deposit basis, the investment club is going to be buying property outrightly. So what that means is this: if a property has been seen to be below market value and is worth maybe about 50K or 70K or 100,000 or 150 or 120 or 90, right? The property investment club will raise that money and buy it in full. That means no bank loan, no bank mortgage, no nothing on it. But with the intent of now adding value to it. So let's say, for example, you buy a property at about 80,000 and you use about 20 or 25 to upgrade it, and the total value is now 100. But when it is now valued, they now valued it at maybe 125 or 130,000. Now, what that means is that by the time the bank decides to now evaluate it, and they say that, okay, you said it's 130, but from our own valuation is 125, right? Is 125. What it means, I think that must be from your side. Can you hear me clearly, everyone?
Yes. Yes, sir.
Yes, sir.
Okay, because somebody says network is breaking. So maybe you should check your network, please. Yeah. So as I was saying, right? So when the bank now decides to evaluate the new value, they now say it's 125. If they now decide that, okay, we can release a loan to value, LTV, a loan to value of 75% to you, what that means is that they were going to give you 75% of that 125,000. When you do that, let me just quickly do a calculator here. So 125,000 times 0.75. So that's about 93,750. What this means is that this is the value that the bank will release to you, 93,750. Mind you, you bought the property for 80,000. So that means you spent 20,000 to upgrade the property to 100,000, but they now value it at 125 for you. It simply means that the money that was used to buy the property is now retrieved back. That 80,000 can be taken out. The only difference is that the 20,000 that was used to do the refurbishing is not up to the difference here. So maybe about 30,750. So it means that you still have about 6,250 in the property. But the main value, the main cash that was used to buy has now been retrieved. However, by the time they now put the property back in the market, the property can now be put for rent or service accommodation. The 80,000 that was used to buy the property initially can now be used to get another one. And that is how the wealthy use OPM, which we call other people's money, OPM, to make wealth. Now, what is the benefit for the members of the club in this instance? By the time they do this, because this is a marathon, for those who are on the call when I did the Navigating the UK landscape, it's a long haul. So when you do this over a period of time, that is, you are rinsing this thing 1, 2, 3, 4, 5. The goal is to build a portfolio that services the members of the team. Now, in every climb, whether Europe, US, Africa, property always increase in value every 5 years, every 2 years, every 3 years, depending on the climate of where you are. You're already getting rental value from that property, which is a dividend. By the time this property that was put at 125 becomes 3 or 4 years in the market, it's going to increase in value again. And that is what they call capital gain. Now, in order to protect the investment or the investors from what they call capital gain tax, because the government will also want to get part of that capital gain, you don't sell it. So when you don't sell it, what happens is that you go back to the bank and get the bank evaluate the house again, and the house maybe has become 150. That change in value is tax-free cash that the investors have to either share as dividend or reinvest back again. But the beauty of the property investment club is that it's a proof that everybody has a lot that you are gaining from. I hope we are following. And the second benefit about this property investment club is this. Real estate is real. It does not get lost. No matter what happens, even if there is fluctuation of market forces, like maybe the economy market force makes the property to go down this time, the property is still there. Value still goes back up again. So what this means is that your money is preserved, right? And that is the beauty of real estate. Then we will be able to revitalize several properties that have run down and people are not ready to do anything about it. You change the narrative and the members will become financially free because of financial due diligence that will be carried out in all these things. So how will this work? How will it work? Right? Through funding pool that is contributed from everyone, acquisition of property, right, from different places, different cities around the United Kingdom, will be acquired, right? Property that are below market value, they will be renovated, the values will increase, and when the values will increase, you either refinance them or you sell. Selling, government will also always want to eat capital gain. So the beauty of this thing is that I will not subscribe to selling. I would rather subscribe for us to have a portfolio. I remember when I was doing my master's in the UK, that was in Newcastle. There was this I think he was an Indian. He was my landlord that time. His name was Aftab. Aftab was about how old was he? Maybe about 28 or 29-year-old guy. And he would just come. And I said, come Aftab, how is it that you have a property like this at your age? It was just around 28, 29 that time. He said, my family, we have 100 properties in Newcastle. I said, when did you come to this country? He said that my father came about 40 years ago. Now, they had a long-range plan. Under 40 years, one family had 100 properties. No wonder it was not working. So the question now is this: whether you sign up or whether you join, 10 years will come, right? And you either choose to be that one broom or the one that joins forces with the other broomstick to create something that is really massive. Now, what is the financial model for the first initiative? The financial model is what I've explained. Pool funds together, buy it, renovate or refurbish it, refinance it, rent it out, or resell. If you see that the margin really makes sense and the capital gain tax will not be too much, okay? That is the thing that can be done. Obviously, the projected returns, yeah, is going to be massive because of the power of combined forces, right? The power of combined forces. And there are two options that anyone who wants to sign up to this thing can actually explore. The first one is you can decide to cash out. Cash out means that once the investment that you put in matures, let's say, for example, there is a property that is 100,000 and your own share in it is about 2K. When that property matures, the portion of 2K in that investment, you can decide to get it and take your leave. Or you decide that, look, I am in for the long haul because I believe that it is a long-term investment. It's just like what this man, very, very industrious and phenomenal investor, Warren Buffett says. He said that if you are going to buy any stock or going to buy share in anything, if you are not ready to buy the shares and keep it for 10 years, he said that it's better you just decide to keep the money and go and use it to do another thing that you want to do. And that is why he's one of the billionaires in the world today. So it is about reinvesting. I remember when I was younger than this, when I was a teenager, that the very first time I started buying shares was maybe when I was about 16 years old. You wonder, how did I have money to buy shares at 16? Well, I remember those times that we were, when you take something to a family during Christmas, they will give you 1 naira, 2 naira, 50 kobo, all those money that give us in those 90s. And we had the piggy bank. And it happened that in 1993, the very first time, I just saw this advert on radio where my bank was trying to sell shares at 1 naira, I think 50 kobo. And I bought 1,500 that time in 93. And that was the journey of buying shares. By 2005, that I was going to, I think I came in 2006, 07, I came briefly to Nigeria to stay for some weeks. I remember that time, I sold part of the share that I had in some companies and I raised 500,000 and the shares was still there. Now, see the period of 93 to 2005. That's just about maybe 12 years. And I had so much. So I want us to see this as an opportunity to plan for your retirement, because it's not the work, like Yoruba say, it's not the work that you do that will make you free. It is what you invest that will actually amount to something big for you. Now, a typical example of how this thing works, this financial model works, is that, let's say, for example, you buy a property at 90,000 with a pool of funds from the group, and the property, right, is upgraded with about 10,000. And after 10,000, the property is now valued at, the price is now 100,000. But the real value, because it is the surveyor that will now come and value the property, is now 150K. That 50,000 on top is the gain, the value that has been added to the property. However, if you want to go through the refinance part, which is going back to the bank will now give you 75% of 150. That is how you get your initial money out. Then you are now the owner of the property. The property is now fully owned by the group and it keeps like a pipe. If you have read this book on pipes and buckets, most people, for most of their life, they are always carrying buckets, but they don't spend time to build pipes. Because when they spend time to build pipes, you'll be free after a while. I will recommend that book for you. If I find it, I can share it with us later. I've read it a long time ago. Pipes and Bucket. Very phenomenal story of two friends who are able to create wealth. Okay, time going. Let's quickly run. The second initiative I want to share with us this night is the African Startups Venture Fund. Now, the first one is going to dovetail into this one. And what is this thing about? Look at this statistic that we have here today. Today, as of last year, top 10 African countries with highest remittance. That means money that is sent by black tax, money that is sent by people abroad in diaspora to their countries. Nigeria is topping the chart, followed by Egypt. Look at in a nation in just a year, $19.55 billion was money that flowed into Nigeria from remittances. Now, the question you now ask yourself is this: if this much flowed into Nigeria, where did it go to? And there is still so much problem in the economy. Where? It means that most of them went either to urgent 2K or school fees of some people, or these real estate people that are saying that buy land here and do this one, this one. They just buy land and the land is there, but nothing is happening. So it's high time that we now change the narrative and see how we can make sense of this money that is going down. If I ask some of us here today, some of us are still sending money to Africa almost every month, right? You have commitments, you have a budget that you send people things to Africa almost every month. Now look at these statistics. According to the World Bank, the inflow is now like almost double what we get in AIDS in Africa. Inflow from remittances from people that are abroad in diaspora. Look at the number, 95.6 to this. It's really massive. So what this tells us is that there is so much going on with remittances. This is the reason why I'm encouraging us that we can work together to build what I refer to as African Startups Venture Fund. And what is this fund all about? Is that, for example, we start from the Property Investment Club with the long-term goal of scaling, building a portfolio that brings high returns to the members. But you now take it to the bigger league. What is the bigger league? You now start identifying startups, businesses across different sectors, whether it is health, property, education, and so many other building businesses, right, that are in Africa, for which we're going to do due diligence on and invest to create venture fund for these African startups. If we leverage, like for example, I was checking the exchange rate of pounds. If you are sending pounds to naira today, as of today, July 15, sending pounds to naira is 2008 naira. 2008 naira. If you are going to buy it, it's 2070 naira, according to Lemfi. Now, what that means is that if you send 10 pounds to Nigeria today, it's going to be 20,000 plus that you're going to get. Now, imagine the value of a consolidated fund that is targeted at a startup that is going to grow. Imagine taking this fund and investing in agri-tech that is driving food production to feed different places. Or is it in health tech, or is it in edutech? I will show us some case studies to be able to see how these things work. We heard of Paystack some time ago. The people who paid the check to say that we believe in this small startup, by the time Paystack was sold for $200 million, those ones have cashed out at that time. This is how these things work. What is the benefit of having a venture fund? There is great gain in investing in emerging African markets. Africa has the youngest population in the world today. 1.3 billion people, of which some 5% are below 25 years old. 75% are below 25. Go and check. The record is there. So what does that tell us? A continent that has 54 nations and the people there are young. That is where the traffic is going to Africa. Europe is going there. China is almost dominating several African countries because they have the money and they have seen that the money can make sense in Africa. Why do you think they are funding several governments? And we that are the Africans are not seeing what is happening. This is how we can do something that is going to guarantee sustainable wealth for everyone, boosting entrepreneurship and job creation in Africa, and divesting our portfolio as a group. So how does this work? We're going to be using profits from property investment to establish a venture fund. I have somebody on this call who is an expert on venture funds. I'm sure he'll be able to chip in one or two things on this aspect also. Then we'll target high potential startups in various sectors in Africa. By the time we do this, we'll definitely cash out because when you nurture, it's just like a baby. When you nurture a baby to grow, that baby is going to grow and become a mighty oak. We'll nurture them to profitability and exit for great returns. So the financial model of this one is that the initial capital comes from investment and funding rounds. Because, for example, when they say that success has many fathers, when something becomes successful, that is, it has scaled a bit, the big giants will say that, oh, we want to come into this thing, and they will multiply the value. Because if you, for example, if you had maybe 50% holding in something, and a Facebook or a Tesla now comes and said that, oh, we believe in this thing, we're going to pump about $500 million into this thing. That $500 million will now divest the share portfolio, but it will still make sense because it's now scaling. I want you to start thinking about the bigger picture of this thing and bigger return on investment. See some of the success stories that have happened in Africa. The one in the middle there is Andela. This one was set up a few years ago, and today is a unicorn. That means $1 billion company. You can check some of these things. M-Pesa is in Kenya. Agra is an agric fund that is powering smallholder farmers in Africa. You can check their website on Agra. These are things that have come and they have really transformed things in Africa. Okay, so as I'm rounding up my presentation today, what is the synergy between the Initiative 1 and Initiative 2? The synergy is that there is going to be reinvestment loop. Profits from property investment will fuel the venture fund, and it will become a sustainable, continuous cycle of investment and profit generation. And the beauty of it is that there will now be wealth creation, sustainable at that, for Nigerians in diaspora, and simultaneously with developing the African continent. What is the risk involved in this thing? Very simple, but not scary. Market fluctuation in property can make it to dove. It's not like what you do in crypto and all these things. No, what you put the money in is there. You can see it. It will always go back. Or if you're going to refurbish something, carrying out due diligence on what it will cost is what can be like a risk there. But once the due diligence is done properly, that one can be cleared. And of course, when you want to do startup investment, identifying the one that will scale, bringing experts into the firm, and ensuring that due diligence is carried out before investment is divested. So, my dear friends on this call this evening, I want to invite you, right, to join, because whether you like it or not, 5 years will come, 10 years will come. What will you be doing? Let's build a vehicle that we can be proud of in 5 years' time. We'll be proud of in 10 years from now. And we'll be able to say that, yes, at a meeting like this is what happened. So if you are interested, I would like to either send a DM to me on WhatsApp or send an email to wealthyfuturestar@gmail.com. Let's invest together. Let's identify the opportunities to grow. And together, we can democratize wealth creation for everyone. Thank you very much, everyone. I want to welcome questions from all of us. Okay.
Yes, sir.
All right. Questions, comments. I hope we are still on the call. Hello, everyone. Yes, you have the floor. You can unmute yourself.
Good evening, sir. Good evening, everybody.
Good evening.
Sir, thank you very much for this very wonderful presentation. Mine is just like a contribution, sort of. One of the cooperative society that was part of in Nigeria,
Mm.
it was actually formed by women, and they later brought in some other people, were some men. So the school where I was working, we had another campus in a location that had no hostels. So they decided to buy land and build hostels. And they encourage every member of the cooperative to buy shares. The maximum you can buy is 750,000 so that it can go round, so that everybody can have a share. So you can start, I think then the lowest you could buy was about 10,000 or something like that, or 20,000. So many of us took the opportunity that time to buy. And right now, the returns is coming. It's not so much. For example, last year, I think it was about 9,000 or 10,000 I got. The return is not so much now, but I can imagine in a few years to come what that would be. So in an economy like the United Kingdom, if we seize this opportunity to do something like that after doing our due diligence, I think it's something that we'll look back in future and say, oh, thank God I took this opportunity. So I just want to encourage us, if it's something we could do, because it's like the Indians they're really taking over, and this is one of the things they do for themselves. So
Absolutely.
if we can do our due diligence and take this opportunity, I think it's something worthwhile. Thank you, sir.
Absolutely. Thank you so much, Fadurabi. Adurabi. Yes, I got it right. Thank you so much for that contribution. It is just the truth. The statistics from the UK government shows that Indians have the highest. That's just the truth. And it's because of communal effort. Yeah. So doing the right thing. Now, the funny thing about, let me just quickly chip this in. Two things about real estate, depending on where you're doing it. In the UK, what you get from real estate is capital gain. You have capital gain in real estate. But in Nigeria, right, there are two ways, or will I say three ways? The first one is capital gain from land, not house. Land, just land, bare land, right? You buy land and it appreciates in value faster. That is where you can get capital gain in Nigeria. But if you say you want to build house and expect capital gain in Nigeria from rent or for anything like that, it will not come. The only way that you can make money in Nigeria from building is if you carve a niche in the luxury or tourism area or entertainment aspect of real estate. So what that means is that you have invested something to build a facility that becomes entertainment, tourism, or luxury for people. So that what you are getting on a daily, on a weekly, on a weekend basis is much more than if you put it on rent. So that is why if you see somebody that has a oil that is so very interesting, nice oil, all these Balmoral oil and everything like that, you go and check how much they get those oils in one weekend. By the time they do all the weekends in the year or every week in the year, 52 weeks, you get close to 5 to 10 million per week from all those places. You multiply that by 52, that's by 500 something million. You see that that is how they make money back from that kind of building. Rather than say you spend 100 something million on the building to go and be getting rent that is no more than 300,000 or 400,000 or even 1 million, 2 million. You understand? So that's the beauty of that one there. Any other question? People on the call? Yes, yes, yes. The time is fast spent. I don't want to keep people too much on the call this night. Okay, go ahead, sir. Are you muted, Ms. Salaraju?
Yes, sir.
Yes, go ahead.
Good evening, everyone. Uh, Good evening, Dr. Lewis. Thank you
Good
for
evening,
a
sir.
wonderful presentation, sir. In your last presentation during the SOV meeting we had, I
Yep.
was actually curious. I was actually hoping to hear from you talking about investments in UK and everything, but I couldn't hear anything like that. So during your presentation tonight, when you now mentioned all these things, I was so fascinated and happy to hear all those things. The first one you spoke about property investment club. I think is a is a laudable initiative. If we can key into it, just like you have actually explained, there are a lot of profits based on some of us that actually came in as a student. You could see how much these agents have been collecting from us every month.
Yep.
And if we are part of this thing, then the all the resources that they have been collecting from us, we too can also be we can get it back for some of us that have paid handsomely to all these agents. So
Yep.
it's a good initiative.
Yep.
Now, sir, my questions on that is the environment we are right now is quite different from Nigeria, whereby we can gather ourselves, start a club without even registering and doing some other things. But we are in a different environment. I just want to call your attention to that. Probably you have looked into all those areas, the
Yep.
legal aspect of it, the registration,
Yeah.
and the area
True.
of that you also mentioned, sir.
True.
So yes, I want to hear from you, sir, on
Good.
that one.
Very good. Very good question. That's a very good question.
And then,
Yes, go ahead. Second question.
okay, and then the second one, African Startup Venture Future. I think that one too is reasonable, and I think we can also, just like you said, that the profits that we gathered from the first investment can be rechanneled into this particular area. I think that one is okay.
Mhm.
But my questions on that one as well is you mentioned various, just like the research you have done so far, all the various initiatives that has been done in African countries. And since we are just starting,
Mhm.
I don't know if we just want to launch out to something bigger like that, or probably we are looking for something small to start with, either within UK first before launching to the African countries. That's my question. That's my second question.
Very good. Very good.
Thank you very much.
So let me first of all start from your first question, which is about how to ensure that the legal implications of running something like this works within the United Kingdom. The platform that that makes this thing possible is to run it as a cooperative. Now, when it is run as a cooperative, then you are regulated under the FCA, which is the Financial Regulatory Body for the United Kingdom. However, because of the scale that this thing wants to go, the fastest way or the best part to do it is to partner with a licensed FCA agent. So what this means is that there is an organization that is already licensed. So it's just like saying that you have a banking institution or you have a financial institution who already has a license, but now has a product that is like this that we're running. So you can now partner with them, collaborate with them, and say that, look, this is a product. So the terms of engagement with them, you'll now be able to ride on their own shoulder to run it. Those are the two things that I've already found out to run this thing. You can run it as a cooperative or run it in partnership with an FCA licensed body. Those are the two ways to run it. Further details will be provided later because this is just a show and tell session. The second one, which is the venture capital fund. You see, the venture capital fund is such that by the time you start making reasonable returns from investment in the country here, you can now decide that let's pull this fund together. So, for example, you see, let me give a very, very interesting example. Let's say, for example, you see that there is an opportunity for you to set up a luxury center that accommodates people to do maybe entertainment, parties, or anything like that in a hybrid area in Africa, let's say in Gambia or South Africa, or even Nigeria, right? And you now see that this is the way this thing will run. You get people that are going to run it. That kind of pool of fund can be used to start that. Or even you start at a small level. Let's say you see a startup that is already scaling. Let's say, for example, you know, when they say you want to invest in something, you first of all see the numbers. What have they done? That means they have gone beyond starting. They're already running. And you now see their potential, you see the numbers, and you now see where the market is going. Then you can decide that, okay, you are bringing this fund into this thing with the intention of playing on the long run, as in long haul. So 3-5 years on the long run, that this is where we are going with this thing. Because the day that small thing that is valued at maybe 10 million or 20 million today becomes 1 billion, you will be part of the people that will be cashing out there. So it's about starting small, growing big faster. So that's what I will say with that one. Thank you very much. I think I saw the hand of Oriyomi up.
Good
Yep.
evening, sir. Thank you
Good
very
evening.
much, sir, for the presentation. Though I couldn't hear well at the initial stage, it was logging me off. But Mr. Olariwaju has the question. I wanted to ask about the legal aspect, knowing that this country is somehow
Yep.
legalistic on different things. So, and you've
Yep.
done justice to the question. However, I want to add to it. I want to add another question to it. Still on that legal aspect, you know, even back, maybe my Nigerian mentality anyway, even back home in Nigeria, when people do contribution, do cooperative, some people default, and it will be like, you know, there's nothing you can do for me. I was just thinking that, well, we are in a foreign land that is that aspect also, if it is under cooperative, with such aspect be looked into the aspect of trust, like faithfulness on every member's aspect. I hope you understand my question, sir.
Yep. Thank you very much for that. So the cooperative in Nigeria is different from the way they run cooperative here. Here, there are several cooperative models that they run. There are cooperatives that own, what do they call it? Drink distilleries. There are cooperatives that own bakeries in this country. There are cooperatives that run retail stores in this country, right? And what do? It's about identifying something that they have done due diligence on. So there is savings, or there is usually savings and investments. So there is savings and investment, and there is all those ones that they do, maybe Christmas savings or holiday savings. Those ones are different from what we're talking about. It's about the ones that they do investment. So, and before they do the investment, there is due diligence and everything is there. Okay, so that one is not about you default or anything like that. No, that one is about lots, LOT, saying that an investment opportunity has come up. These are the numbers. These are this thing. So in our own case, what we are doing is property. This is the value. This is the estimate. The professionals have checked. They have seen where what faults are there. This is what is going to cost. These are the things. These are the numbers. It will be clear, black and white for everybody, right? So there is nothing like somebody default. No, this one is this is the value. This is what you are putting in, and this is what you are getting. No film trick there. Do you understand? So it's different from Nigeria that maybe where government are supposed to make deductions and debit to pay into a particular place. No, that's not what we're talking about. This one is about, this is on the table. Are you ready? Do you want to put something into this? And that will make sense. Maybe after this call, I will share a video link with us. That video link was a documentary that was, I don't know if anybody has come across that documentary. It was by a BBC correspondent. Is it BBC? Yeah, I think, yes, BBC. I have the link. I will share it with us. And the interesting that documentary covered about 10 or 12 Africans. Out of those 10 or 12, 9 were Nigerians. And it was showing how these guys have run property. And where did they get the money from? The money was from pool of people, right? Who they met on social media. Can you imagine that? There were some of them that they interviewed the people who invested in what they were doing. So what I'm talking about is not like, it's not a film trick. It is real, right? And I think that one will also help us to have broader context and understand this thing better. Thank you very much. Any other question? Mr. Kayode Adeyinka. Mr. Adeyinka, are you still on this call? I want you to please give a brief hint on venture funding in Africa, and that will be the last contribution on the call. Mr. Adeyinka, are you here? I hope he has not disappeared on this call. I wanted him to chip in something. Mr. Adeyinka, are you there? Let me see whether I can call him. I don't know where he has dropped this call. Okay. Just a moment. Okay, possibly has gone off the call. In the absence of any other questions, I would like to appreciate everyone for joining this call this night. Expect me to share the link. And like I said, if you want to join, send me a DM and we'll see how we go. Once again, thank you so much to everyone that joined. You are appreciated. Bye for now. Good night, everyone.
Good night, sir. Thank you very much.
Yes, sir. Thank you.
Yeah.